Joining us now for more on a CNBC exclusive is Truist Financial CEO Kelly King. Kelly, good to see you. Thanks for being with us.
Glad to be back. Thank you.
So obviously, Truist, the product of one of the bigger mergers we've seen in years. You're still kind of assimilating that deal. How is that going? And what does it say to you that now we are seeing perhaps another round of consolidation in the industry?
Yes, so thanks, Mike. We just completed our first year birthday, our first year anniversary. And so we've made it through that challenging first year. It's going really well. You know, our cultural integration is fantastic. The synergies that we expected when we announced the deal are even better than we thought. We're on track with regard to the expense savings that we projected. We're moving along with regard to branch closures. Our people are loving the culture, and revenue opportunities are fantastic. So we feel really good about it. And, you know, I'm not surprised to see other consolidations out there. Ours is, I hope, a good example of where scale matters. And if you do it right, it can be really good.
We obviously had a Fed decision today and a press conference from Chair Powell reasserting their intention to keep short-term rates very low for a very long period of time. And also on the long end, they don't expect things to go really anywhere. What does that backdrop mean for your business? Do you think that's appropriate?
Well, yes, I do think it's appropriate. To be honest, I think the Fed's done a really nice job throughout this whole crisis. And it's certainly premature to raise rates. We do have some reasons to be optimistic, you know, with the vaccine and some positive indications with regard to the economy. And so, but clearly we still have major challenges, and the Fed should be very supportive, very accommodative as they are. Now that keeps a relatively flat yield curve. It makes it harder for banks to make money. I think that's why you were talking about earlier, some of the activity in terms of acquisition of fee income businesses. That's a really big focus for Truist. We're closing on 5 insurance acquisitions this quarter. Because that's a really big, robust fee business for us. And so while net interest margin derived from, you know, taking in deposits and making loans, while that's relatively subdued, it's a good time to focus on cost control and fee generation. And that's exactly what we're doing. And that's frankly what a lot of the other people are doing as well.
Now, as well as bank stocks have done, yours and others, in recent weeks and months, you know, they've obviously had a tough road over the past several years. Meanwhile, these fintech companies, payments companies, very strong. A lot of macro concern about the ability of traditional banks to invest in technology and stay relevant with customers. Is that valid?
No, not really. I think what you're seeing with regard to bank stocks right now being subdued with regard to fintechs is largely that, you know, everybody knows when the economy is tough, banks have a challenging time because of interest rates and because of credit challenges. And so the market still is not quite sure that the credit challenges are going to be really high or really low. I think they're beginning to see with some releases the banks have made that maybe it's not going to be nearly as bad as we thought. I heard earlier this morning on your show that one analyst said that banks were a big pick for next year. So I think people are beginning to realize that maybe challenges of credit are not going to be quite as bad as everybody thought. And then when the economy starts to grow, you'll see volumes, you'll see improvement in net interest margin. So this is kind of the rough spot for banks, but it'll get better as the economy gets better. But look, here's the thing. The reason BB&T and SunTrust came together is for that very point, Mike, so that we can compete with the fintechs and the very largest institutions. We're all investing mega millions of dollars in the latest and greatest technology. Our mobile platform, for example, was just listed as the very best mobile technology platform in the entire country of anybody. So, we know that we have a great set of technology. We're investing very heavily in it as we go forward with our new Innovation and Technology Center. So, yes, the largest banks can compete very effectively with the fintechs. That's the myth that they like to try to put out there. Yeah. But we can. We work very closely with a lot of fintechs through APIs and various interfaces. And so the biggest banks have the technology, will continue to invest in technology. But the scale helps you have the marketing to explain it to everybody, and that's what we're focusing on now.
Yeah, as you said a couple times, certainly a scale business. Kelly King, got to leave it there. Thanks a lot for being with us today.
Thanks, Mike. Have a good day.
Shepard Smith here. Thanks for watching CNBC on YouTube.